video we are going to discuss about triangles. Now, as you might have learned from your geometry classes, that triangles are of various kinds. Some are symmetrical or equilateral, I would say, and some are isosceles, and some are of various shapes. But when we talk about triangles in technical analysis, there are basically three kinds of triangle that we normally focus on. The first one is in the form of a symmetrical triangle, where the upper boundary and the lower boundary are almost inclined similarly but in opposite angles around the horizontal line, and the others are ascending and descending triangle. In this video, we will solely discuss on symmetrical triangle. In the next videos, we will go into the ascending and the descending triangles. Now again, these triangles are consolidating patterns, and once there is a up move or a down move, we find a triangle, a symmetrical triangle here in this case. And if after the consolidation there is a breakout in the case of a up move and a breakdown in the case of a down move, we get a follow-up move. Now let us talk about the up move first. First, we have a steady up move. Then at certain point of time, the price movement become a little bit choppy and consolidates within a range. And as time progresses, and again for triangles it should be normally close to 3 months or more. So as time progresses, we see the range of the price action become a little bit narrower. So once the narrower range actually also manifests itself in the form of lowered volume, we see the activity within the triangle actually comes down. So what we have right now, we have price moving within two boundaries, one inclined up and one inclined down, and what is happening is that the range of the price has come down. Now suddenly we will find that on a particular day the buying pressure overshoots the selling pressure, and what happens is that there is a price movement that is in the upward direction. Then we should take a buy trade. Again, with the example of spring, we understand that as a spring, the price action was being coiled within a very small range, and as there is a movement out of the triangle, it is like a spring breaking out of a compressed spring breaking out of your hand. Now when we are talking about this up move, the target of the up move would be the height of the triangle. So how can you do this? So suppose the moment the price is breaking out, you draw a parallel line which is parallel to the lower boundary of the triangle, and the parallel line should be drawn from the high of the triangle. So from the high of the triangle, if you draw a parallel line parallel to the lower boundary of the triangle, stop of a bullish, it is parallel to the resistance line. That is your potential target. And again, if on the breakout in the case of the up move or breakdown in the case of a down move, we can see that the volume is increasing. After a die down of volume within the triangle, we can be more assured that the movement, the price movement that is coming, that is sustainable, it is a safer move to trade. Now let us look at a few examples here and we can understand from that. Here you are looking at the Havel's chart, and in the Havel's, see, first there was a very good up move, and then there was a triangular consolidation, and once the symmetrical triangle was broken on the upside, you could see that the price moving quite a bit of higher. And in this case, what happened? This is a weekly chart that 1 week the price fell, but fell to the support line, and you see from there was again a repeat rally, but your initial target was reached within the first move itself. So this level acted as a support later also, but that is not significant. The point is that if you had gone long here with a stop loss below the swing low and with a target, you could have earned a goodish bit of profit after that. Now let us look at a bearish example here. Here you are looking at Sun Pharmaceutical weekly chart, and what you can see that initially there was a steady down move that was happening, and after that you saw this triangular consolidation. Price was pulling back, and within the triangle it was forming a symmetrical triangle and very compressed price move, and as soon as there was a breakdown, there was a little bit of down move, and you can see then there was a little bit of pullback towards the resistance line, and then there was a fierce down move, you can see. And see, in the initial down move, your target was achieved, that you could have drawn a parallel line from this low, and your target was this was achieved, and then there was a little bit of pullback, and see, after that the stock fell much lower. So that is what I was telling, that you can take part profit at your target and again trail stop loss with the remaining quantity. So if there is a more sustained move, you can enjoy that move by doing this trailing of stop loss. So this is all about symmetrical triangles. In the next video, we will discuss about the ascending and the descending triangle. Thank you very much.